Let's talk about the four big players. Because again, there's so many angles to this. Part of this is, one political titan, the president, and then three business titans, and their motivations here. They want to win because they're competitive, and we see that whenever we have this kind of face-off. Ellison wants to buy the whole thing. He wants to combine CBS and NBC. He wants to leapfrog into the top tier of the streaming game. And he wants to continue to build this massive media empire in news and entertainment. Sarandis wants to dominate streaming and take that part of the company to get the library and to get another streaming component. And the president wants whatever he wants. The mystery to me is the man called David Zaslav, who runs Warner now, Warner Brothers Discovery. He is according to Ellison, has refused to engage with their bid and clearly wants to have the tie-up with Netflix. He's made a ton of money in this company. He's been criticized for his management of the company, but he stands to not only gain for himself, but he stands to have gained for the shareholders because the stock price is up. And now on the offer, whichever offer they take, if either of them goes through, he will have done what some people think he needs to have done, which is to create value for the shareholders. What is motivating him? Is he trying to do right by the shareholders? Is he trying to get rich? Is he trying to stay as a big player in news and entertainment? What are his motivations?
Is there a D there? All of the above.
Yeah, all of the above. You can take that.
In fairness, just with regarding to Zaslav, I mean, this was not a process the company was expecting to be in right now. They were planning to split the company into two. One side would be what we'll call the sexy assets of the movie studio, the TV studio, HBO, and the other side, the cable networks. Not so glamorous, melting ice cube, but still very profitable business, but seen as a drag on the company, just like Comcast is doing, breaking up NBCU.
Let me stop you there. If
Sure.
if that split had happened and there hadn't been a buyer or two buyers, he was going to run the entertainment side. Was he going to have any Was he going to have any connection? Going to have any connection to the company that was going to be CNN and the other linear cable channels, or he wouldn't have anything to do with that if that happened?
There'd still be some connection there. In fact, and this goes to one of the motivations I think Paramount had in jumping in when they did. As part of the split, the cable networks company was going to own 20% of the studios and streaming business. And the incoming CEO of that business had said already they'd gotten a lot of interest in that 20% stake. And I believe that Paramount, seeing that, wanted to make a play for the entire company, didn't want to wait 2 years the way Zaslav was anticipating, that in 2 years the split would be done and everyone would come in and want to buy the studios and streamer. They didn't want to deal with that and have someone else holding 20%, and just thought we can make a deal for the whole company and that'll be an easier sell to the board.
Right. Ladies and gentlemen, if you're watching or listening, this is an incredible story, and Joe Flint's as good as anybody at explaining it, but I recognize this is complicated. It's got government regulation, it's got corporate rules, it's got the rules of takeovers, it has legal implications, and again, all the political stuff I talked about earlier. It's super complicated. I'm sorry if some of you might be having trouble following it, but we're talking about it in as simplified and as elegant a way as we can, but it is complicated. I accept that. I know that, but it's a great story. So you've got the reality of there's a timetable, December into January, of different deadlines for making offers, changing the offers. Both sides can, in theory, change things up. In the history of these things, and again, you talked about how rarely a hostile effort succeeds. Do we ever see the decision makers, the board and the CEO, in this case of Warner Brothers Discovery, do we ever see them flip? Do we ever see them say, yeah, we like with the previous people who were hostile, now we want to be with them? Or they'd only change if the shareholders insisted?
I think they would definitely, sort of see which way the wind is blowing.
Yeah.
But as I said, it's not impossible. It's not unheard of. It has happened. It's just that the odds can be a little long for Paramount, but clearly they believe these are assets they must have to go forward and be able to compete, which is why they're willing to do this and not quietly walk away.
Yeah, David Ellison has been in and around Hollywood for a while, not in the news business, but in the entertainment business. Does he have a existing and/or existing friendly relationship with Zaslav? Do they like each other? Because if you look at just this week, Ellison is being very critical of the fact that Zaslav and the board have not engaged with him. But is that friends in a fight, or they don't really know each other?
Well, I think they've gotten to know each other, and I'm not sure where they would be standing right now. I will say that the Warner folks, I don't think, look, no one likes three unsolicited bids for your company. It was pretty much Ellison's actions that kind of led Warner to have to put the company on the block, because they made these three bids. Then other people started asking too. And so the board decided, hey, we need to explore this. They also had a business dispute a few months back over South Park reruns, believe it or not, very popular on HBO Max, and they couldn't come to terms on a deal that Zaz thought was locked down. So there's been some tension in that relationship, certainly over the last few months.
And again, Paramount makes South Park and sells it to the cable channel.
They sell. Of course, it airs on Paramount's Comedy Central, but HBO Max, the Warner property, had the reruns, which do very well.
Right. Okay. Right now we've got two offers, and it's a little bit apples and oranges, because the Netflix offer is just for the part of the company, the studio and the streaming, and the premium channels, and the Paramount offers for the whole thing. Are we at the right valuation? Do people in the business say, well, they can raise their offers, but if they start to raise their offers here, they're going to be overpaying for the assets?
Well, I think there's already some concern with the Netflix bid. If you look at how their stock is doing the last several days, the market is not sold on this. Their stock's gone down the last few days. So I think there's some concern on the Netflix side about the size of the deal.
So let me stop you right there on that. I'm
Sure.
sorry, just trying to walk people through it. So the market's saying, Netflix, we think your bid may be too high, that you may be either overpaying or trying to swallow an asset that's not going to be good for your business, right? That's the message. Would that impact the behavior of Netflix in terms of making a bigger offer? Would it impact the behavior of the board of Warner saying, well, this is not a good sign?
Well, certainly, I imagine Netflix, they've been out trying to make the case as well. They held an analyst call when they had announced the deal. Yesterday, Ted Sarandos and Greg Peters, as co-CEOs, were both at an investor conference and praising the deal and explaining why it's important to them. So I think they're hoping that the market will start to come around. But Netflix has never done a big deal like this. That's the other concern. Yeah, they've smartly, in my view, chosen to stay out of the consolidation game and built a very good empire without necessarily needing to do all these deals. Clearly, these assets are very good. The Warner assets, the library, HBO, they're top of the line. So certainly can understand their interest. But they're getting into a lot of businesses they haven't been in before, and it's debatable how much synergy there'll be. And by synergy, that's the polite way of saying in Hollywood, cutting costs and layoffs. Paramount, of course, operates in all the same businesses as Warner, which again would be a concern for regulators. Netflix doesn't do theatrical, as we've discussed, really. They don't make TV shows for other outlets. Warner Brothers makes a lot of TV shows for everyone. So there's different businesses that they're in here that I think are a concern.
So let's talk about that, because there's a reason why they haven't done deals, right? They've been very successful doing what they do, sticking to their knitting of getting more people to sign up, and they've added different layers, ad-supported, et cetera. It seems to me kind of a big risk here. They're buying things that they don't really know how to do, and I don't really get the upside. So do the analysts they have say these additional programs, both the library that they're purchasing and the capacity to produce new programs, are going to solve the problem they've had, which they've bumped up against the subscriber potentials? Like anybody who's going to get Netflix pretty much has it already. And they believe that this unlocks even greater of those monthly payments, which anybody who would be in a business, you want to be in a business where you get monthly payments. It's the best businesses to be in, because the recurring revenue just keeps coming in the door. But how does this, what's the theory of the case of Netflix to get out of what they've done, go do a big acquisition? They have the cash because they got a lot of cash, but why is this a good deal? What's the theory of why this is a good business deal for Netflix?
Well, I think, as you said, the subscriber growth, which has been amazing, is starting to slow a little bit. they are very concerned, as all streamers are, with time spent on their platforms. And Netflix, actually, for all their popularity, they're six right now, according to Nielsen, in terms of in the U.S. of amount of time spent on their platforms. Paramount, with if you include CBS and everything Paramount owns, is actually higher.
Yeah.
So this is great content that they feel will help increase that. It will help internationally. You know, Netflix is very popular all over the world, but they make a lot of local content. They don't necessarily have the type of content that can, translates through borders that that does well like Warner does. So that's another driving factor as well. But to your point, with it comes other businesses Netflix hasn't been in. They've said they'll embrace them, but we would expect them to say that right now as they're trying to get a deal through and ease concerns in Hollywood and Washington about job loss.
Right. Let's talk about the CNN of it all. I've been in the news business, the television news business, so I'm very familiar. I think it's been 3 decades of conversation about combining CBS and CNN. That just has been around forever under different owners of both entities. And there's some logic to that, I suppose, because CBS as a news division has lagged. Barry Weiss is there now trying to figure it out. Ellison has been very, if you take him at face value, very, I'm going to say lyrical or high-minded in his rhetoric, saying we want to produce high-quality news. And we believe if you produce non-biased, high-quality news products, that's a good business to be in. And I love the fact that he says it. And I love that he hired Barry, and I hope it's right. But is that a big part of the financials of this, or is that to appeal to Donald Trump? Like, where's the what's the theory of the case of high quality news product being something Paramount could make a living doing?
Well, unfortunately, as you know, and I know, the news business is very challenged right now economically. There's been a lot of changes in the marketplace. Yes, I mean, at some point, CNN has been linked with CBS. I remember writing stories about CNN and ABC. There's always been talk of combining the global reach and scale of CNN with a broadcast network. It'd be very complementary, incredible cost savings. I don't think, though, it is a huge driver financially of a deal. But these are nice trophy assets to own. I mean, owning a CNN, even with its ratings troubles, it's still a well-known brand around the globe, as is CBS News in the United States primarily.
If Ellison loses, and as you've pointed out, he's more likely than not to lose based on the odds historically of the hostile bidder, and given how clearly oriented the Warner board and CEO are towards the Netflix offer. If they lose, is it imperil the company that they've just purchased? In other words, is that a good business by itself, or he really needs this deal to make this work for him?
Well, I think it's still a good business. I mean, Paramount has a lot of strong assets besides its own movie studio and library. Paramount Plus has been growing nicely as a streaming service. CBS is, a big broadcast network. They own a lot of cable networks, which are challenged like all cable networks are, but good brands. But it's not seen as being on the scale of a Disney, an Amazon, a Netflix. So that's the challenge there, to try to get bigger. And are there other assets that they can go after to try to beef themselves up? Of course there are. But I think this was always in the back of Ellison's mind of first Paramount, then Warner. And so, with that not happening, if it doesn't happen, to be clear, there may be a little bit of going back to the drawing board.
Yeah. Well, is Comcast a possibility for Ellison?
Well, that'd be an interesting one. Obviously, Comcast was going after Warner as well. They were a long shot and pretty much acknowledged they always knew that. There would be some more. There would be more regulatory issues there than with a Warner. So that would be a concern. Right. I won't bore your listeners with that, but
just
we'll
the local
happens.
TV stations alone would be a huge complexity. Lastly, again, there's a bunch of deadlines and potential deadlines over the next 90 days or maybe 45 days. Is this with us for 2 years? Is this possible this gets settled sooner than 2 years from now? Because even if one side's offer is accepted finally, we're going to have regulatory scrutiny. We're going to have private lawsuits. So Hollywood's going to, probably unions will sue. There's all sorts of people who are going to object to whoever wins. So is this going to be resolved, say, in 2026, or it's going into 2027 no matter what?
Well, let's put it this way. I'm hoping to retire by 2030, so I hope it's done by then. But no, I think we're looking at certainly at least a year. And we're already at the end of this year. So this whole thing may not be sorted out in terms of a winner till early next year. And then you'll have at least another year after that of regulatory review and lawsuits, states attorney generals weighing in, everything else that could
happen. And the Europeans,
so,
as you said.
And the European review, which is not going to be an easy thing for either of these buyers either.
Yeah. The European regulators move as quickly as Italian desk clerks in hotels, which is not very quickly. And your editors and your readers are just totally gung ho for this, right?
Sure. I mean, right now it's obviously a hot story. There's a lot of interest in it. These are known brand assets, so hopefully the reader enthusiasm will be there. Certainly not. I'm complaining a little about the hours it's keeping me up, but it's always good to be a reporter on a story with a lot of interest in it.
Yeah, well, I've got great interest in it, and there's lots of other coverage of this story in the Hollywood Trades, the New York Times, and some other places. But I say this as part of why, Joe, we wanted you on. The Journal's coverage of this is best in class, and really it does a good job of capturing the personalities, which is a big part of this story, the implications for consumers, and the White House angle, but also all the regulatory stuff. All right, so if you're using a normal phone, you're going to see those creepy ads that pop up all the time. They tell the people out there exactly where you've been, what you've bought, even who you've been talking to. And you probably, when you see that happening, because you see signs of it on the phone, you probably ask yourself, is my phone monitoring me? Well, the truth is your smartphone is constantly collecting and leaking data, all without your knowledge and without your consent. Every day, it's building over and over a more detailed profile of your whole life, your location, your habits, your interests, even the people you're communicating with. And all that information gets funneled into what is an invisible marketplace where it's tracked and analyzed and sold to the highest bidder. It's annoying, of course, but it's also very invasive, and it's nonstop. You're on your phone nonstop. The data is being collected nonstop. But now there's a solution. The Up Phone by Unplugged is totally different. It's designed from the ground up to protect your privacy. There are no hidden trackers. There's no data mining. Just a secure and streamlined smartphone experience that puts you back in control. I love it. When I use it, I feel empowered. I feel like I'm actually getting to do stuff without the trade-off of losing everything in my privacy. That's if you're texting, if you're browsing, whatever apps you're using. The Up Phone ensures that your personal information stays personal. It's the phone for people who are done being watched all the time. If you're ready to take back your digital privacy, this is what you need. Visit unplug.com/Mark. You'll get 25% off a phone case with the purchase of a phone. Learn more and order your Up Phone today. That's unplug.com/Mark, because your life, it should be yours, not theirs.